Ladies and gentlemen, good day and welcome to Q1 FY26 earnings conference call of Rupa and Company Limited, hosted by MUFG in time. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Omkar Bagwe from MUFG in time. Thank you, and over to you, sir.
Thank you. Good afternoon to everyone, and thanks for connecting with us on our first Concall for this financial year. On behalf of Rupa and Company Limited, I am delighted to welcome you all to this call. Thank you for taking the time out on this call to discuss our latest results and financial performance. To discuss our results, we have from the management, Mr. Vikas Agarwal, Full-Time Director, and Mr. Sumit Khowala, Chief Financial Officer. They will take you through our results and then we will proceed to question and answer session. Before we proceed, a small disclaimer. This conference call may contain some forward-looking statements about the company which are based on the beliefs, opinions and expectations of the company as on the date of this call. The actual results may differ materially. These statements are not the guarantee of future performance and involve risk and uncertainties that are difficult to predict. A detailed safe harbor statement is also given on page 2 of the company's investor presentation. Now I would like to hand the call over to Mr. Vikas Agarwal. Thank you, and over to you, sir.
Thank you. Good afternoon, ladies and gentlemen. On behalf of Rupa and Company Limited, I extend a very warm welcome to all the participants joining us today for our Q1 Financial Year 26 results Concall. We appreciate your continued interest in our company, and I trust you have gone through the financial results and investor presentations uploaded on the stock exchange. Yes. The first quarter of Financial Year 26 was marked by a complex industry environment with intense competition intensity and significant pricing pressures. The ongoing price undercutting in the market has increased price sensitivity among trade partners, and coupled with our strategic decision to maintain price discipline, influenced our top-line performance for the quarter. Revenue for the quarter stood at 184 crores compared to 210 crores in quarter 1 Financial Year 25, while overall volumes were subdued for pressures in the market that impacted primary offtake. Our athleisure category continued to deliver strong momentum. This validates our strategy of investing in fast-growing consumer segments. EBITDA for the quarter was 12 crores with an EBITDA margin of 6.6%. The EBITDA for the quarter moderated primarily due to higher branding and advertising spends of 21 crores, representing 11.5% of the revenues, along with absorption of administrative and other expenses on lower revenue base for the quarter. We remain focused on cost discipline and driving operational efficiencies to offset these impacts. Our export business maintained positive traction, growing by 10% year-on-year. Modern trade remains stable, contributing 15 crores, accounting for 8% of revenues, with the business continuing to remain an important channel for future growth. Operational cash flow for the quarter was 33 crores. As on 30th June 2025, we maintain a robust net cash and cash equivalent position, including investment of 53 crores. These reflect our prudent working capital management and financial discipline even amid a challenging industry environment. On guidance front, during Q2, we expect to regain the volume deficit of Q1. However, due to intense pricing competition in the industry, we expect margin to remain under pressure. The EBITDA margin is expected in the range of 8 to 9% for the coming quarter. While in short term, pricing pressures in the industry will continue to weigh on margins, our disciplined approach to pricing will remain integral to sustain brand equity and profitability over long term. We are actively enhancing channel efficiency, defining our product mix, and accelerating innovation to meet evolving consumer preferences. With focused investments in high potential categories, we are confident in our ability to navigate the current environment and deliver sustainable growth over the medium to long term. With this, I would like to hand over to our CFO, Mr. Khwala, for the financial highlights. Over to you.
Thank you, sir, and good afternoon to everyone. Thank you for joining us on Q1 FY26 earnings call. I will take you through the financial performance for Q1 FY26. Revenue from operations stood at 184 crore compared to 210 crore in Q1 FY25, registering a decline of 12.6% year-on-year. Gross margin for the quarter stood at 37.7%, which increased by 140 basis points as compared to corresponding quarter last year. EBITDA for the quarter stood at 12 crore versus 18 crore in the corresponding period last year. The EBITDA margin stood at 6.6% for the quarter. Net profit for the quarter is 6 crore as against 10 crore in Q1 FY25, translating to a PAT margin of 3%. Our working capital as on Q1 FY26 stands at 763 crore as compared to 811 crores in March 2025. We are a cash positive company with a robust cash surplus of INR 53 crores as compared to INR 24 crores in March 2025. With this, I open the floor for question and answer session. Thank you everyone.
Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Ruddhi Vora from SAS Capital. Please go ahead.
Yeah. Thank you so much. So I have a question that since you are heavily invested in the marketing expenses in Q1 FY26, so what is your yearly guidance on marketing expenses?
6 to 7%, ma'am, on the top line.
Okay. Thank you.
Thank you. The next question is from the line of Darshan Jain from RJ Investments. Please go ahead.
Hello, am I audible?
Yes.
Yeah, thank you for taking my question. I just have one question. Would you take any price hike this year?
For the time being, like raw materials are also under pressure and the market scenario is quite competitive. So at least for 2 quarters we don't see that, and we don't know if there's a sudden hike in raw materials we might, but at the moment it doesn't and it looks unlikely.
Okay, alright sir. That's all from my side. Thank you for answering my question.
Thank you. The next question is from the line of Isha Murthy from M&A Ventures. Please go ahead.
Hello, sir. So my question to you is, like, what is your capex plan for the coming year, the current year, financially 26?
There is no major plan as such. There will be 15 to 20 crore.
Okay. And also, I saw your P&L and the subcontracting expenses in the Q1 FY26 is on the higher side. So can you provide the reason for the same?
Ma'am, if you see the absolute number of Q1 FY25 and Q1 FY26, the absolute numbers are more or less, and just due to declining revenue, the percentage is showing on a higher side. But nevertheless, the subcontracting expenses is related to inventory. Whatever subcontracting expenses incurred is a part incurred, become the part of inventory.
Okay. Thank you.
Thank you. The next question is from the line of Raj Patel from RK Securities. Please go ahead.
Yeah, I'm audible.
Yes.
Yeah, thank you for the opportunity. Just 2 quick questions from my side. So I wanted to know what will be the thermal order book size for this year?
Yeah, we are receiving a good orders for thermal as of now, and we expect that we should grow by 5 to 10% in Q2 against the last year Q2.
Okay, and what will be our current working capital days?
The current working capital days is 223 days.
Okay, that was all from my side. Thank you.
Thank you. Before we take the next question, a reminder to the participant. Anyone who wishes to ask a question may press star and one on their touchtone telephone. The next question is from the line of Shubhankar Gupta from Equity Capital. Please go ahead.
Yeah, hi, sir. I just want to ask two questions. First is, modern trade is not picking up, and we also saw that there was a huge expense in the brand development cost, which was around 21 crores, right?
Yeah.
So, despite being such expenses, why has modern trade not picked up in whole 1 year?
Yeah, modern trade means this quarter shows a stable performance, but we are quite hopeful that we'll achieve a turnover of 80-90 crore from this channel, and the demand is we are seeing that the demand in this quarter is picking up.
Okay, but still like 21 crores being spent in one quarter, and despite that, let's say channels are not picking up, so that's what I think one concern from mine. Like, where did we exactly deploy 20 crores is something which I was more keen to ask. 21
crore constitutes the celebrity payment also, and this will be rationalized in quarters to come. So our yearly target remains from 6 to 7% of revenue. So it will be rationalized. Hello.
So the line for the current participant has been disconnected. We'll move on to the next participant. Before we take the next question, a reminder to the participants. Anyone who wishes to ask a question may press star and one on their touchtone telephone. The next question is from the line of Shubham from Equity. Please go ahead.
Hello, sir. Am I audible?
Yes.
So I just have two questions. The first one being, how are you looking to increase the market share of the women category, which seems to be a more sticky category?
So we are working on the same, and we are introducing a lot of new products also. So it's probably taking up some time, but we are working on to put up the strong foundation for the category to pick up.
Okay. And the second question being, how much does the athleisure sector contribute, and how are the margins there?
Athleisure contributes almost 15% of the total revenue this quarter, and the margins are higher than innerwear, quite higher than innerwear.
Okay. Could you quantify if possible?
Since I can, gross margins for this athleisure wear comes around 35 to 40%.
Okay. Thank you so much.
Thank you. The next question is from the line of Shubhankar Gupta from Equity Capital. Please go ahead.
Yeah, actually, sorry, I was disconnected. So I had one question on the competition bit. So, dollar has seen a growth of around 40% versus we having a degrowth of around 40%. So just want to understand what are we doing to catch up on the growth.
Didn't get you.
So what I'm saying is the competition has done well vis-a-vis us in this quarter. So what are we doing strategically to uplift/catch up on the growth bit?
So in quarter one, our thing was to maintain the price and all for the long-term profitability of the company. But seeing the competition, they have all gone for the price war. So the strategy is very simple. Like the competition is doing price war, which is like 4-5% and more your schemes and price cut in the market, which we need to compromise on our long-term policy for a short term, where we need to, of course, maintain our top line. So this quarter probably, as mentioned in my opening thing also, in quarter two we'll be able to cover up the deficiency and probably close on a growth number.
No, fair. So is it possible to share the ASPs for, let's say, economy or mid-premium segments, so that at least we know by how much dollar is undercutting?
Dollar, we cannot comment on dollar numbers, but our ASP...
No, our numbers, sir. Dollar numbers are there.
For our economy segments, ranges from 45 to 50 rupees. Mid-premium segment ranges from 85 to 90 rupees, and premium segment ranges from 110 to 115 rupees.
Okay. Okay. Got it. Got it, sir. Okay. That's from my end. Thank you.
Thank you. The next question is from the line of Anik Mitra from Phenomic Solution Private Limited. Please go ahead.
Am I audible, sir?
Yes.
Yes.
Yeah. Good afternoon, sir. I have two, three questions. Sir, regarding your raw material procurement strategy, I have seen like there is a cyclical approach, means in the June quarter, like the raw material procurement cost is the highest. It's around 60-70%. Can you clarify like how does it, like do you consume more in June quarter, and whether do you consume more in the June quarter, or how does it go actually for you?
For raw material consumption means for quarter 2 and quarter 3 we have to keep stock for thermals. So preparations of thermals
And winter wear.
for winter wear has been started. So that's why raw material, high cost raw materials are there for in quarter 1. But further gross margins in quarter 1 are low compared to other 3 quarters.
Yes. Yes. Okay. Okay. Got it. Sir, you have one exceptional item. Can you please clarify what this licensing, surrender of the license you have mentioned in your note?
Previously, we have 2 license brands, FCUK and FOTL, when we have surrendered that license. This exceptional item related to the settlement of creditor of erstwhile license brand business undertaking, which license has since been surrendered now.
Got it, sir. Sir, and what is the ratio of your premium, semi-premium and mass product in value terms?
The economy segment contributes approximately 30 to 32%. Premium segment constitutes around 55 to 60%, and the rest is premium segment.
Sir, semi-premium, how much did you say?
55 to 60%.
55 to 60. Okay. Thank you. Thank you. That was from my side.
Thank you. In interest of time, this would be the last question. I now hand the conference over to Mr. Omkar Bagwe from MUFG Intime for closing comments.
Thank you for joining us on the call today. I would like to thank the management for spending the time and answering all the queries today. We are from MUFG Intime, Investor Relation Advisors for Rupa and Company Limited. For any queries, please feel free to contact us. Thank you, everyone, and have a great day.
Thanks.
Thank you. On behalf of Rupa and Company Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.